Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and in this session I'm going to show you a professional gap and then how we use Master Trader strategies to buy a subsequent breakout from consolidation. We are technical-based traders. No setup, no action. Then we take that high probability setup and we see where it is in connection with the overall trend, support and resistance, relative strength, weakness, what are the broader markets doing, and then we just simply enter and manage in between. This is little stick figure showing you the proper breakout and breakdown methodologies. This is an initial breakout from consolidation, relatively equal highs or lows. We want the consolidation to be in the top part, so it's just breaking through resistance, and as with all trades, look to the left, and you need a price void, which means insignificant resistance to the left for the issue to move higher. We never buy things that run from the bottom of the range through the top of the range. The concept of greater than 100% retracement then suggests a pullback. A secondary, actually higher probability way of trading breakouts is let them break out and then pull back in reverse on minor support, which are prior highs. Obviously, the opposite holds true in breakdowns. Here's a trade we gave our subscribers last week. You can see here, these are our simple daily chart. We look at red and green candlesticks, color-coded volume, and these three moving averages, the 20, 50, and 200. And you can just visually tell that MNST has been in a multi-month sideways consolidation. I have my highs, I have my lows, I have flat, short, intermediate, and long-term trends. Now the issue broke out here. Now it pulled back. This was earnings, so we typically don't do anything until after the earnings unless it's a core holding where we intend to hold it weeks to months. This is what we call a professional gap. It's igniting a new move higher from beautiful consolidation. Looking to the left, assuming there's no resistance there, I have my price void on the time frame I'm trading. We need a methodology to get on board. Now this was a big gap, making it very difficult to get on board unless you're just going to buy it with a stop under this prior bar's low. But then that puts the reward to risk into question. It did have a tail here, given an opportunity to buy on an intraday pullback. But these are also all bullish, we call them Master Trader bullish money patterns. Regardless of what time frame you're trading, these are all bullish. So in fact, this was the daily chart, the gap breakout that I just showed you, but we're looking for a setup, a subsequent setup to get on board. So this could have been the pullback on an intraday time frame on this tail right here. But let's just continue here. So we want to get on this as a swing trade, which means I want to buy this, but I don't want to stop way the heck under here. Notice, so it was on our watch list day by day by day by day, waiting for the time to say you are ready to break out. It had 10 inside bars here. Up and down, up and down. This one, small gap negated. This one we call the tell, T-E-L-L, similar to a poker analogy, saying, haha, I know what you're doing now. Notice that this bar gapped up, came down into the prior bar's range, closed with a bottoming tail above the open, and was a small closing breakout from this 10-bar consolidation after a pro gap. We bought over the high. This is a closed trade now. We gave our subscriber, this is in the members area where we show all open and closed trades. Our spreadsheet calculates just $300 max loss. You obviously can increase or decrease that. It spits out the calculated position size based on that stop, 125 shares. We bought this breakout, just simply went into trail mode, made 7.5% return on a very bullish breakout from consolidation. I'm going to show you a trade here, Ford, that we're actually giving our subscribers right here, but let's back up over here because since this is a subject today of breakouts and breakdowns, of course, let's just mark these and talk about them kind of as a good example. So notice that my 200's down, my 20 was flat and rolling over. This is a proper gap initial breakdown. Notice that it gapped to the low of all these bars. Moving averages are just a visual aid to us, speeds up the analysis. But that's a bearish gap there. You could have shorted under the low, stop under the high, until I say it gets altitude, meaning it's working in the intended direction. So it went sideways for a little bit, but this topping tail was an attempt to move higher, which failed. This now gapped under a green bar in a beautiful downtrend now. That was an additional opportunity to short this. Now it's working as intended. You see the range expansion. Your stop's over that green bar. Now it's getting extended far from the 20. What about this one? Would we buy this? Only for a day trade. There's no compelling turn here. It's just a counter trend little bounce. Now I have a nice retest. It gapped back down to the prior low and didn't go any further. So I have green bar, I have inside bar, I have gap, engulfing, closing breakout. I have an arrow here. This is an inside bar. This is what we call a bullish 1, 2, 3 continuation, which is this pattern right here. And then this W bottom is this larger picture. So I have not only a bullish retest, I have a bullish 1, 2, 3 in connection with a large W bottom. This was a beautiful place to enter this as a bottoming pattern. Now, small little bull flag here after breaking out. Red bar followed by a complete engulfing green bar. This is what we call a bull 180 reversal. This is consolidating at resistance, and here is my big price void. Because of this momentum move down, it has a big opportunity to go into the void. Over the high of this engulfing bar, you see the next day it had a small little gap up over this. That was a beautiful breakout. So I got beautiful breakdown. This, no. This, yes. This, screaming yes. This one, not bad, but it's getting closer to resistance. It gapped over a red bar. Definite day trade, maybe swing trade, just go into trail mode. Gave you a little bit of a gain there. Look, now it's coming back to the 20. It's getting its sea legs back. I have 1, 2, 3, 4, 5 inside bars. Notice using the moving averages, I have a declining 200, rising 20, that's consolidating into the apex. That is suggesting the volatility contraction on a breakout is poised to move higher. So here is my new reference point of support, and my next void for a target would be this gap fill up here. So just eyeballing it here, let's just call it 1550. So the recommendation for our subscribers, we're actually recommending buying long calls, which you could buy the stock also over last week's high, stop under these lows with a target here, and this is just another quality breakout setup. Hope that helped. Holidays are upon us. We have amazing discounts. That's just one time of year, which we started it right now at Thanksgiving time. Best savings for our online seminars. We have 3 advisory letters where you get trades like this. Seminars, of course, where you learn how to trade yourself using our top-down techno-fundamental approach, and our live green trading room, of course. We have a $7 trial of that. Come spend a week with us to get to know us if you don't already. Go to mastertrader.com/holidays. Check them out. Any questions? As always, email my partner Greg Capper or me. Good trading. Look forward to seeing you in the next trade review video.